Home buyer demand picks up as mortgage rates fall. We're going to get into all of that and more in this week's Redfin housing market update. Let's go. So on a national level, the U.S. median home price has increased to $350,250. That's up 0.9% year over year. So prices still remain elevated. However, that is off from a peak that we saw in June of 2022. Buyer demand has picked up a little bit as mortgage rates decline. The average 30-year fixed mortgage rate is now coming in at 6.15%. during the week ending January 19th. This is the lowest level since September. Pending home sales still fell 29% year on year. That is a significant decline, but we have seen mortgage purchase applications rise by about 25%, which is a rather significant jump. It's a good indication that buyers are still interested in purchasing a home even in today's market. Now, even as the home buyer demand starts to come back into the market, some homeowners are less reluctant to sell. So new listings for homes for sale actually fell 20% year on year. But believe it or not, that's actually the smallest decline that we've seen in 2 months. So the number of new homes hitting the market are still relatively low, and a lot of that probably has to do with sellers wanting to stay put. Many of these would-be potential sellers are looking at what it would take to sell their home and then finance a new property. Let's say they're moving up or they're trading up into a bigger property, and they're saying, you know what, no thank you. I don't want the higher monthly payment. I don't want that higher interest rate. Many homeowners are locked in the 3% range with regards to 30-year fixed rate debt. Now, even though the median home price has actually stayed relatively flat over the last year, there are 18 out of 50 metros that have seen price reductions. So San Francisco fell by 10%, San Jose 6.7%, Austin, Texas, 5.5%. And then you can see the rest of the list here. Sacramento, California coming in at 3.4% year on year. And then a couple markets that fell less than 2%. Riverside, Portland, New York, Newark, New Jersey, and Las Vegas. So the West is getting hit pretty hard right now. Fairly significant declines here in the California market. So that's something we're going to definitely have to keep an eye on. One thing that's super critical, I think, is inventory levels and interest rates. Pay attention to both of those. That's going to be a really good indication of what the housing market looks like moving into the future here. Now, some of the leading indicators of homebuyer activity, we saw 30-year fixed rate mortgages drop to 6.15%. Mortgage applications jumped up by about 25%, and then Google searches for homes for sale were actually up about 30%. If you're a home buyer in this market, we're starting to get a little bit more activity. Some of those buyers maybe that were on the fence, they're starting to consider coming back in, even with the higher interest rates. And I think that's keeping these prices somewhat elevated. So it's going to be very, very specific to your market. Northern California, like the Sacramento region, that happens to be my market. We're starting to see prices sort of level off a little bit, but only time is going to tell whether or not we see either continued declines or if things stay flat. So that's something that I intend to monitor very, very closely. Now let's jump into some of the key housing market takeaways for 400 plus metros across the United States. This is a national average. You already know that the median home price is around $350,000. That's about flat for the year. Median asking price is actually up 3.9% year on year, coming in at $357,000. We have the average monthly mortgage payment at just under $2,300 a month. That's with a 30-year fixed rate at 6.15%. Monthly payments are up about 30% from a year ago. So we're still struggling with affordability. However, the monthly mortgage payments are about $245 less per month than they were just a couple weeks earlier. Pending home sales are still down about 30% year on year. And then among the 50 most populous US metros, pending home sales fell the most in Las Vegas with a reduction of about 63% year on year. 56% in Phoenix, 54% in Austin, 53% in Nashville, and 52% in Jacksonville, Florida. So these are markets that were really heavy with investors and iBuyers, and we're starting to see those markets get hit really, really hard. It'll be interesting to see how home prices unfold over the next, let's say, 3 to 12 months. Now, new listings for homes for sale are actually down about 20% year on year. As we go into February and March, we'll have to see if we see a major uptick here. That'll be one thing that we really need to monitor closely. As of January 15th, there's 4 months worth of inventory. So if nothing else were to hit the market, it would take about 4 months to sell everything that is currently listed for sale. Now, generally speaking, anything less than 3 months is going to be what we would consider a seller's market. 3 to 6 months goes neutral, and then anything over 6 months is generally what we would consider more of a buyer's market. So we're going into what we would consider more of a neutral territory. It's going to take longer for homes to sell. They're going to sit on the market longer. Buyers are going to have more negotiating power, and sellers are ultimately going to have to readjust their price or make concessions to be able to close those deals. Now, about 29% of all homes listed for sale went pending in a 2-week period. So about 1/3 roughly, and the other 2/3 are going to be taking much longer to sell. In fact, as of January 15th, median days on market is sitting at 45 days. So most homes are taking about 6 weeks to sell. In addition to that, only 21% of homes are actually selling above the final list price. Now, if you look at the past couple years, in 2021, about 33%, let's call it, homes sold above the list price. And as of 2022, just over 40% of homes sold above the ask price. So that's a major reduction from where we were just a year prior. However, it's still 1 in 5 homes that are selling above the list price. Now, I mentioned that 1 in 5 homes are selling above the ask price, but when you look at this chart, on average, homes are selling for about 98% of the list price. Whereas if you go back to prior years, 2021, on average, homes were selling for right around 99.5% of the list price. And in 2022, homes on average were actually selling above the list price, coming in maybe at about 100.1%. Substantially less bidding wars in this market here today. All right, and that is gonna wrap it up for today's video and this week's housing market update. I hope you found this information useful. I would love to hear from you. Feel free to leave a comment below. If you haven't done so, consider hitting that like button. Subscribe if you'd like to see more weekly housing videos just like this and helpful home buyer tips, and we'll see you on the next video. Take care.